Here's exactly how I make a trade in roughly 3 minutes. I'm going to show you guys a real life example of a swing trade that I made on Tesla yesterday. I'm going to show you everything from my phone, no fancy charts or indicators. We're just going to make this as simple as possible. First, swing trading is a bit different than day trading. It's where you are holding a stock for a few days, sometimes a few weeks, whereas with intraday trading, you are buying and selling within the same day. Love it because I don't really have to watch the charts the whole day and the margins are bigger, but you do need more patience for a longer trade. You can trade a lot of different things. There's crypto, forex, penny stocks. I tend to stick to US stocks with high volume when it comes to swing trading, meaning there are a lot of buyers and sellers. Personally, I like to lean on economics and macro catalysts. Now let's get into why I chose Tesla. So for weeks now, there has been a massive sell-off on Tesla. A lot of Elon drama, slowing EV, and just overall a lot of market fear. Me personally, it was starting to look pretty undervalued. I've been watching it like a hawk. I knew that the earnings call was coming up this Tuesday. Leading up to an earnings call, there is always a lot of volatility. There are a lot of people panic selling and a lot of bullish people wanting to buy in. Depending on the results of the call, the price usually goes way up or way down. I believe that the price was already undervalued. That indicated to me that all that needed to happen during this earnings call was for a little bit of good news, just for it to not go miserably to drive the price up. Before we even dive into the details, I wanted to show you this 1 month chart and just to imagine that we are back in kindergarten, solely relying on pattern recognition. What would you expect to happen right down here? You would expect it to bounce, right? We see that multiple times in the chart. So before I even zoom in, I'm already preparing for this setup. I'm just looking for an indicator as to when. Now let's dive into the charts. This is the day before the earnings call. For swing trading, I usually use the 4-hour chart to see higher intervals for a longer trade. I'm gonna use the 15-minute charts here to show you guys all the details of everything I saw. You're probably like, what in the F are we looking at? So see each of these little vertical lines, those are called candles. Each candle represents a time interval, and since we're on the 15-minute chart, each one of these is 15 minutes of trading time. Candle is green, it means that the price went up during that time. If it's red, it means the price went down. The body of the candle shows the price that it opened at and the price that it closed at. These wicks show us the highest price and the lowest price during that time. As you can see, the day started off red. This is panic and fear. We absolutely love that. What I'm waiting and looking for is where a support line forms. See right here that the price begins to flatten out at around 223 to 224, indicating support. Here we begin to see consolidation, which is a tight sideways range where the price is bouncing in a zone. Imagine support like the floor where the price is bouncing off of it, and that is really important because it's going to help us figure out where to enter. Not going to buy in yet. We need an indicator of a breakout. See right here how higher lows are beginning to form. Every time it dips, it's just dipping a little bit lower. That is bullish momentum building. The candle that I was waiting for was a bullish engulfing candle, which we see right here. I mean, do you see how the big green candle could just eat the little red candle right before it? That right there is often the first sign of a reversal pattern. The second I saw the volume start to spike, that's when I knew that I was going to enter the trade. Before you ever even enter a trade, you need to know exactly when you are going to get the F out if all goes bad, and exactly how much risk you're willing to take on. Go in with a plan and you stick to the plan no matter what. So then throughout the night and into the morning, you can see that it starts to surge, but it hits resistance at around 240 to 242. See, that actually wasn't random. This zone was a previous resistance area from earlier in the month where the price had stalled multiple times. I think a lot of traders might have just exited and taken their profits right around there just to manage risk going into the earnings call. I just knew that I was going to be playing the full setup on this one. I was very bullish. Heading into midday, you can see that things are starting to cool off. Candles are getting smaller and consolidations happening again, which is very typical heading into an earnings call. Second, we enter after hours. It's very obvious. This is where shit gets wild. Look at the wicks on these candles. One wick on the top of a candle means the price shot up but immediately got pushed back down, which shows rejection. One wick, the price shoots down, but then buyers immediately step in, showing support. What was important to me here was price was holding even when things got really volatile. That is kind of what told me that buyers were not backing down. And we see the huge breakout candle, which did take us into my target zone, which was at 250. I sold into strength and locked in on the next candle. Even though it continued to go up, I stuck to my plan as always and took my profits at around 250. I'm pretty happy with my $23 margin for a roughly 28-hour trade, which resulted in a pretty good day in the market for me. In my next video, I'm going to run through a day trade with you guys where I rely much heavier on the technicalities and the chart. Be sure to drop your questions in the comments and follow along if you don't want to miss it.